Okay, do you want to learn Elliott Wave theory? Well, if so, consider joining the Green Star Trading Patreon for just £10 a month at Tier 2 or £15 a month at Tier 3, and you will get access to this 11-part Elliott Wave series teaching you Elliott Wave from scratch in a really simple and easy to follow manner. And you'll also get access to my deep dive series, which shows you how I apply Elliott Wave from scratch on a new asset. Also the My Chart series, which is still ongoing and shows you all of the various tools and indicators I use on TradingView and how to set them up. And also my trading playlist, where I show you how I use my method of the standard trade setup, what I call the STS. I also cover some trading psychology, risk management. There's also a whole host of educational materials available on the Patreon as well. And that's just the content, guys. There's a lot more to it than that. If you actually do become a member at Tier 2, you'll also get access to the public Discord, where there are hundreds of members discussing ideas every day. You'll also get access to the weekly live streams, where you're pretty much allowed to ask me anything within reason. And if you want me to cover a certain asset, I'll look at it for you. If you want me to even look at your own work, your own Elliott Wave work, I'll dissect it and look at it for you. These things often go on 4, 5, 6 hours sometimes, and we have a bit of a laugh as well, and you're free to ask me anything you like within reason. If you want more than even that, though, you can join Tier 3 for £15 a month, get everything I just mentioned, but you also get access to my monthly dividend calendar and stock rating system, which looks at high quality stocks with good company health, good value, paying a good yield, worth holding, and that's for the investors out there rather than just the traders. Now, if none of what I've just said, the videos, content, the Discord, the live streams, the calendar, all those things, if they don't appeal to you, and you just appreciate the work I'm already doing on YouTube and want to support me, you can pay us £5 a month and still bag yourself one exclusive video each week. Alright guys, thank you for listening. Now let's get back to the video. Hello everybody and welcome to Green Star Trading with me, Tom. All views, opinions and ideas expressed in this video are my own and do not constitute financial or trading advice in any way. Right, we're here and we're looking at Bitcoin on the weekly chart at the moment using the Brave New Coin Liquid Index for Bitcoin, the BLX. We're going to be doing something a little bit different today here on YouTube. We're going to be bringing my YouTube audience up to speed with my subscribing patrons. Now, a few weeks ago, I put out a video on the BLX explaining my long-term count and what I see as the long-term Elliott Wave picture for Bitcoin and how we break down this long-term price action. Now, this has been a contentious issue of late. Some people on YouTube who've watched more recent Bitcoin videos and have seen the change in my primary count are arguing about the length of the correction, how it can't possibly be right, so on and so forth, and I think it's because of their ignorance over the longer term count, and I'm going to put that right today by taking responsibility for explaining it, so that if people do truly understand and appreciate what I'm saying over the long term, they will understand and appreciate why I think what is happening over the shorter term. So without further ado, let's strap in and get on with this. Here is the entire price history of Bitcoin, right, from 2010 to today. Now this is the best we can do with BLX giving us the maximum amount of price data. The question we're going to solve, or do our best to solve today, it is only after all an opinion, is how to count these larger cycle waves. Now, before we get into how I've done it, let's talk about some of the things I've seen out there. So I've seen this one, quite popular, 1, 2, 3, 4 and 5 into a larger 1, okay, into a 2 here, and then this is 1, 2, 3, 4, 5 into a smaller 1, 2, similar to what I've got, but I still think this is wrong. I've also seen a count such as this. This is 1 and 2, and this is 3, and this is 4, and this is 5, and this is the end of days, and we're completely collapsing. This is also wrong, in my opinion. Now let's talk about why I think that. This correction here and this correction here neither show a new price extreme and therefore do not qualify for alternation with one another. They are both sharp corrections. Now, I recently did a video on alternation for my patrons that just went out recently. It's going to be part of the Elliott Wave series, which is now 13 episodes long, and there seems to have been some confusion, and I think it's a common community issue about how alternation actually works. So That's going to be a theme today. Now let me show you what I mean and bring up the corrective form of these corrections. This one down here is also a sharp correction, so we could put a label around that, but what you'll notice in a little while is the length of this correction is significantly shorter than these other sharp corrections. Now, no new price extreme. Now, sharp correction to sideways correction is not sufficient to provide alternation. One will have a move beyond the prior end of the impulse and one will not. That's alternation. We do not have that here. We just don't have it. So to label this 1, 2, 3, 4, 5 is incorrect. And therefore to label this as 1, 2, 3, 4, 5 is incorrect. We can't have sharp correction, sharp correction, sharp correction. Now alternation may not be an absolute rule, but it is highly desirable. So much so that Elliott himself said that he believed it was a fundamental rule of the universe. So if we're going to take the guy's work, which is what we're practicing here, we should probably take his philosophy too. Sharp corrections alternate with sideways corrections. One of them, the sideways correction, will show most likely a new price extreme beyond the prior end of the impulse. That's it. And the other won't. That is not the case here, that is not the case here, that is not the case here, that is not the case here. Right. So to label this 1, 2, 3, 4, 5 or 1, 2, 3, 4, 5 or 1, 2, 3 is wrong from an Elliott wave point of view. So let's get rid of the corrective form for a moment and now let's bring up the length of these price moves. Now, what we want to focus on here is the size of the price move itself in arithmetic terms, linear terms. We are not obsessing over the percentage move here. If you were to perceive the size of these waves by their percentage gain, you would be doing yourself a mischief in terms of screwing up or skewing your perception of the scale of these moves. This first move is to $975 in scale, in size. This next one is $19,552 and this next one is $65,748. So although we use the log chart to help us identify structure, because it's impossible to observe it in arithmetic scale, we must keep our heads on our shoulders and remember that this move is exponentially bigger than this one, is exponentially bigger than this one. I would like to reiterate that point before we continue. So, now let's have a look at the correction lengths and the length of the impulses combined. I'll have to excuse me, my allergies are playing up at the moment a little bit and I'm struggling with a bit of a tight chest and a sore throat. Now, let's take this first correction here of the ones we labelled with our corrective forms. We can see that this is 413 days in length. This next correction is 364 days in length, smaller than its prior counterpart in time. That's what matters in determining wave degree for corrections. Currently we've done 224 days. Okay, so far in this correction. Now it could get longer, there's no doubt about that, it could get longer, but for the moment it's shorter, significantly so than 364, significantly so than 413. So when we take the length of the impulse and the length of the correction, we get 1218 days plus 413, 1064 plus 364, 1064 plus 224 so far. So this move is larger than this move, is larger than this move. Although this was a massively bigger price gain and this was a massively bigger price gain than this. So there is, as you can see, a relationship, a different relationship between the scale of the move in price and its length. Now, why would corrections be smaller than one another? Well, we've already determined that there's no alternation between these patterns. They're all sharp corrections. So if this move and correction is bigger than this move and correction is bigger than this move and correction, what Elliott wave structure does that fit perfectly? It fits an extension. Because labelling it, as I pointed out earlier, 1, 2, 3, 4 is wrong. Because these two corrective structures do not alternate. But worse than that, someone who is labelling it like this is suggesting that the entire length of the strongest wave in Elliott waves theory of 3 and the entire subsequent time-consuming wave 4 of the same degree is for some reason shorter than the 1 and the 2. Now that seems extremely unlikely to me. Highly improbable. Okay? So I think I've introduced the idea to begin with. So, now let's pick it apart a little more. One of the other issues I've seen is labelling this 1 and 2 as part of a larger wave degree for everything which comes afterwards. This is a much smaller correction than this or this. Right? So it is not a larger wave degree. It is, however, a subwave. 1, 2, 3, 4 and 5 into 1. Now people will be saying, I've had people say it, why is your 3 so short? Why is your 5 shorter than your, so much shorter, and tiny relative to your 3? Your 3 is smaller than your 1. Your 1's the biggest wave. That doesn't look right, Tom. Well, you're in log scale and I think you've forgotten that. Right? Because this is what the move up to here is. This is $29. Right? This smaller wave 3 that you don't like the look of, right? This is $265. So let's just actually measure that for a moment, shall we? So, here's some fib measurements. Let's just zoom in. This entire move here, of this wave 1, of which I am saying that this is not a subwave, so it's not going 1, 2, 3, 4, it's going 1, 2, 3, 4, 5. This small 3, as it appears here in log, is 837.8% the length of this. It looks smaller in log, right? But it's 8.37 times the size. It's huge. Okay? So yes, this is not a subwave within a 3. This is the 3 and the 4 of a first wave up. Now let's continue this measurement for a moment. This wave 3 relative to the teeny tiny wave 5. That teeny tiny wave 5 is much smaller than the 3, isn't it? Look at the length of the 3. Look how teeny tiny the wave 5 is. Well, actually no. The wave 5 represents a $1,086 move relative to a $264 move. The wave 5 is 406.9% the size of the wave 3. Do you hear what I'm saying? 4 times bigger. Now I'm hammering this point home because it has to be understood. We are looking at an exponential growth market. We have to wrap our heads around that if we're going to start counting it. It's in our nature to try and conclude a count preemptively, prematurely. And that's what I think a lot of analysts, and I'm not picking on anybody because there's an awful lot of talented people out there, but a lot of people are missing that point and are in a rush to get this to complete a larger wave degree when there is no rush at all. The waveform itself is confirming this. Sharp correction, sharp correction, sharp correction, sharp correction, and sharp correction. Okay, so now let's look at another thing. We're going to talk about wave behaviour now. Now we can see, as I've broken down with the measurements we were just talking about, if we were to do the same for this wave, and for this wave into 2017, you will see an extended fifth wave in each move, a blow off move, several times the size of the wave 3. In the most recent price move up, we do not show an extended fifth. We end up with a fifth that's very close to where the 3 completed, and it does not extend significantly. This is the explanation, and very obvious one, as to why we have come in to the prior cycle's move. The behaviour of the extended fifth waves keeps the retracement, even 80% retracement, out of the prior cycle, because the fifth did not go 3, 4, 5 like that, it went 3, 4, 5 like that. That's where all of the work was done, and this is where all of the work was done. This is what we have to remember. Alright, this huge 3, remember, sorry, we're using the wrong tool. This huge 3 in log scale was only $163, but this extended fifth was $1,106, more than 4 times the size. Huge. We can retrace 90% of just the fifth wave and still get nowhere near the prior cycle. Now in this case, we did not extend the fifth, and therefore a 90% move back from what was roughly the top of the 3 can bring us in to the prior cycle, and it appears to have done so. Okay, now moving on. Another point I want to make, okay, because this has been brought up. I'm countering all the things which get brought up in the YouTube comment section, or I get emailed about frequently. And so many different ideas and counts get thrown at me, and I just need to set the record straight about what I think and how my analysis works here. So the next thing I've had people point out is declining volume. The volume is declining the whole time, Tom, right? It's not going up and supporting these moves. This is another misnomer. This is a misunderstanding, right? This is an exponentially growing market. Each of these subsequent moves is multiple times bigger than its prior. So let's just take a look at the volume for a moment with a couple of random samplings. Let's take this huge spike in volume down here, the biggest by far in the history, at the lows of the 2015 bear market. And let's see what we traded down here. Bitcoin traded a total of, let's get the absolute, 3.319 million Bitcoin were traded here at the lows, but it amounts to $879 million. This huge spike. Now let's take this seemingly teeny tiny little measurement in volume down here on 17th of May 21st of 21, sorry, 17th of May 2021. Here, a measly 806,252 Bitcoin were traded. Tiny in comparison to what was traded back here. But the total volume of Bitcoin traded equals 37.5 billion. I hope that this gets across the exponentiality of this market and why volume is declining. It's a hell of a lot easier to trade millions of Bitcoin when it costs $166 as opposed to when it costs 58,000. Now, I know I'm probably teaching a lot of you out there how to suck eggs. Teaching Granny how to suck eggs, so you know this. But I'm hammering the nail home to try and make the point about don't presume and don't preempt and don't prematurely try to conclude a count of this market. It's very early days. Everything here is telling us that. Right? That's what I firmly believe, and I think the analysis backs it up. Now, let's move on and bring up some indicators for a moment. We're going to hide our unbalanced volume here and the MACD, and we're just going to look at the prior behaviour of Bitcoin during its major market cycles. So let's mark the lows with verticals so that we can see them. Now, question mark, is this the low? Let's observe some prior behaviour here. Right, and let's bring back up to remind ourselves the fifth wave behaviour we see in these structures. Right. Market bottom. We came down to RSI on the weekly time frame of around 21, and we put in the market bottom at extreme oversold conditions on the weekly time frame. That was the 2015 bear market low. December 2018 bear market low. We came to extreme oversold readings in the RSI. Okay. 2022 bear market low? Question mark. We've come to extreme oversold readings again. The most extreme oversold readings of 19.35. Now let's have a look at how we've done this round trip of overbought to oversold, overbought to oversold, overbought to oversold. This is what we do on the weekly time frame when we're completing these larger degrees. We come from overbought to oversold, overbought to oversold, and we complete down here in extreme oversold conditions. Right when the vast majority of people are getting the most bearish, the most scared, the most paranoid, the most panicked, the most self-righteous in their opinion that Bitcoin's going to zero. We need people to be thinking that. It's absolutely essential that people think that, otherwise the market cannot bottom. Right? It's only in the depths of the most bearish sentiment that the market bottoms. Are we bearish enough yet? Maybe not. Maybe we need a few more smart asses to come out of the woodwork and tell everybody that we're all moon boys. Right? Maybe we need everyone thinking that before the market bottoms. Now, one more feature I would like to point out here is the weak fifth wave here with no extension gave strong divergence prior to the low. This supports what I've been saying earlier about the behaviour of these waves. These fifth waves go from peak RSI to oversold and therefore do not bring price back into prior market structure. This is not some doomsday event. This is a lack of understanding. When people say, oh, we've broken into the price cycle structure, that's somehow terrible. No, it is simply a feature of the fifth wave not being extended in this cycle. It doesn't mean anything more than that. The fifth wave gave strong divergence. Here it is, within the 3 of the 3 to the 5th, huge divergence, breakdown into oversold conditions. There we go. Okay, I think I've done enough to explain my argument, so let's now talk about the count. I said an extension fits, and I believe firmly that it does, given what I've told you here. We can all slap a count on the chart because it roughly looks right. Well, that's got to be 1 and 2, that's got to be 3 and 4. It's easy to do that when we just don't obey or pay any attention or any heed to Elliott wave theory at all. But if we're going to pay heed to some very important features of it, we should not be doing that. Okay? So, the question is very simple. If this and this is bigger than this and this is bigger than this and this in time, then this is, let's try that again. Then this is 1 wave degree, sharp correction. This is another wave degree, sharp correction. And this is another wave degree, sharp correction. This is a smaller wave, then this is a smaller wave than this. Here's the count. Bum, ba, 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 bum. Now, you can relabel this cycle into primary, into intermediate if you wish. It probably is that, to be honest. But in order to be able to label the smaller time degrees, I've decided to do it thusly, just to express the idea. Super cycle 1, 2. Massive exponential growth in the first wave, huge deep correction. Okay, cycle 1 and 2, massive exponential growth, huge deep sharp correction. Primary degree 1, exponential growth, sharp correction. It's a wave 3 extension. Now you might shout moon boy, you might shout pie in the sky, but you give me your analysis of why you think you can label this differently. You give me your analysis of these wavelengths and their exponential relationships. You give me your analysis of why we are repeating the same correction over and over and it's getting smaller over time. You explain that to me in a way that respects Elliott wave theory, and I will listen. Now, I'm sorry if I'm coming across as an arrogant prick today. I'm really trying not to. I'm trying to clarify what I think I can see here on the chart. Now, I could be wrong. I will hold my hands up and say that. And just because we're down into oversold conditions does not mean we can't come down a lot deeper. That's what we're going to look at next. But it's a long, long way before we invalidate this idea. So, to sum up, these moves, impulsive and corrective elements, are smaller than their prior counterparts because they are the same thing at a smaller wave degree. It's a giant, absolutely giant wave 3 extension, and it's only just begun. Okay, so now that we've explained that, let's now come into this more recent price data and talk about just how deep we could go and this still be correct. Okay, because like I said, maybe we've bottomed. It's possible. We've had some volume come in this week. We may have bottomed around here. We may have further to go, but we may have bottomed. Okay, is sentiment bearish enough? If you're the moon boy out there, and I'll hold my hands up and say whether I'm not going to spout fundamental arguments at you. I'm not going to spout or tote the benefits of Bitcoin fundamentally. I'm an analyst. I'm a technical analyst, and this is what I look at. I look at charts, and the chart is telling me that this is happening. That's it. That's my best interpretation I've got, and I'm going to go with it. If that makes me a moon boy, then I guess I'm a goddamn moon boy. But when enough people are telling me that I'm a fool, and that I'm wrong and they're right, and I'm going to lose all my money, and everyone's telling me that, that's likely going to be the bottom. Okay, I'm just not sure everyone is telling me that yet, but I think we're getting close. So let's now bring you guys up to speed here on YouTube with the shorter term picture. We are not going to obsess over the Elliott wave today. I will do an Elliott wave update for Bitcoin sooner or later, but we're going to continue the theme for today's video of what does this price action tell us, and how does it relate to our long-term count. So first thing we're going to look at is support. Alright, so we had weak support, which was the prior high 2017 and the retest of it here. Okay, prior high tested with resistance becomes support. Now it turned out to be weak support, as it is pretty thin trading around here, and this gave us 764 spot 51, and we broke this. We wicked below it. We did not body through it yet, but we did wick below it. Okay, now we're just going to bring up a couple of other tools. We're going to bring up a fixed range volume profile. This gives us an idea of just how thin the trading around the high was here. A little bit, right? And trading was going on. So this was a demand zone, right? We've moved up and we've pulled back, caught a bid and moved again. So let's bring that up. So the light demand zone with weak support, but we have currently got a long wick to the downside, some volume coming in. Could be a low. Doesn't have to be the bottom, but it's at least a low. How long it lasts for, only time's going to tell. Now let's give the bears their due then. Let's give the bears their due and say that we just come down and down, whatever we're doing, and we just keep coming down lower. Whether it's a WXY, WXYXZ, whatever. We're going to continue to come lower. And the long-term count will still be correct. Okay, there's a very long way until it's not. So let's say we come down into some strong support, right? Here's the volume profile fleshing out. This is a heavy demand zone, right? Bunch of highs here, bunch of highs here, resistance, bunch of highs here. Multiple resistance levels, going to be strong support. Right. Then we've got a back-tested high here, a low, back-testing this high, which back-tested this high, this one, these lows, this high, this support. Another very strong support level. That's at 9953 spot 51. Heavy demand zone here with another support level, all of these lows, and these lows, and subsequent highs in here as well, and here as well. This is our point of control in our volume profile, also likely to be an area of support well into a demand zone here. So let's say that everything I've said is wrong, and this is correcting some kind of larger wave degree, then there's still room for a zigzag, maybe a flat or a zigzag, and another zigzag, and get below 10 grand, or even lower, down into here, or even lower. So it's not as simple as we've fallen 80%, every bull out there is wrong, right? I was there in 2017, I was there in 2015, I've been there, I felt it, I've heard it, right? The bulls were right. It just took a while. Now it's probably going to take a while again, but if we are at a smaller wave degree, as I think we are, it's not going to take as long. Not as long as it has before. Right, so what else can we add into this? Let's add in the golden zone, right, and the 50. 50 is kind of hanging in there in the middle of nowhere. Not sure it's going to play out to be significant. Lot of thin trading here. However, the golden zone, 61.8 to 65, brackets perfectly this strong support at 9953. If we, for whatever reason, do not bottom soon, but instead extend this correction, this is the most likely place that we are going to find support. Okay, now we could anywhere in this heavy demand zone, but that's where we're most likely to do it. Golden ratio, strong support, thick trading. Got everything we need down there to stop. Okay, so this is how I see things from a classical analysis point of view at the minute. I have my count, and so far I have it as potentially having bottomed or bottoming soon. I've mentioned in prior videos that I do believe a bottom is imminently close, within weeks. Okay, and I believe that's still to be the case, but I'm just saying that if I'm wrong, I could still be right. Now, I'm not saying that's what matters, I'm just saying keep your eyes on the technicals, keep your eyes on the count, keep your eyes on the chart, and don't get caught in the FUD. Because the cut-off point for all of this, the when it all gets invalidated, is down here at 394 spot 12, 3,941 bucks and 21 cents. That's a long way away, guys. Very long way away. And if we come in any time before that, the idea of this being a 1 into a 2 of a smaller degree is valid. And there you go. That's the long-term count of Bitcoin explained. We could look at a few other things as well, but honestly, I want to save, as I've put out a recent video for the BLX for my patrons again, where I've looked at all the other various elements of support, trend support, channeling, pitchforks, all of that in a more recent video. Now if you want to get access to that, you can sign up to the Patreon and you can get access to that, including like the new alternation video I put up on Elliott Wave Theory to add to the Elliott Wave playlist as well. Now I will try and get back to you prior to the weekend, and we'll dig into the nitty gritty of the actual count, and we'll go through that in detail on the smallest time frames on our other Bitcoin chart. But I think this has been a long enough video already, and I hope it has shown my thinking and my logic and my rationale behind the long-term count of Bitcoin and the technical evidence I have to support that position. I'm not just throwing 1, 2, 3, 4, 5 on the chart because it looks cute. I'm doing it because it makes sense. Okay? Thank you very much for joining me on this classical analysis and long-term analysis of Bitcoin. I hope you've enjoyed it. If you're new to the channel and you like what you've seen, please feel free to hit the like button, smash it in fact for that matter. Feel free to leave a comment in the comment section below. Excuse me. Huge thank you as always to my Patreon subscribers. Your support is massively appreciated. If you do want to access more material like this and you want to join the Patreon, then follow the link in the description box below. Head over, have a read of the tiers, see if there's anything you're interested in. And if you're not following me on Twitter yet, please do so, as I always announce videos I release to YouTube on Twitter. Alright guys, take care of yourselves, and I promise I will be back later. Hopefully if my allergies hold off, fingers crossed, because it has been tricky recording lately. And I will get you up to speed on the minutiae detail of the account. Alright, now take care of yourselves and I'll see you soon. All the best, bye bye.